Hi, everybody. Welcome. Welcome, welcome. Let's get started. Any questions, comments about yesterday's earnings? Please let me know. Request to speak. Any specific questions you want to talk about? I'm happy to answer. Tesla stock is up 4.4%. Overall markets, Dow Jones up slightly. Everything is flat, basically. Russell 2000 is up 1.2%. A number of announcements, obviously earnings announcements from Meta, Nvidia, Meta and Microsoft. Microsoft down more than 6%. Nvidia is also down today. So this is a bit of a change from normal course of business lately. Russell 2000 is leading the markets up today. Some outperformers are Tesla, Broadcom, Oracle, IBM after announcing good numbers. And on the downside, we have Comcast, UPS, Microsoft, and Caterpillar after announcing some bad numbers, guidance as well. And Altria also lower. American Airlines is trading lower today, likely due to the accident from this morning. And Nvidia is at the lows that it saw on Monday. So just below $120 per share. For those who follow technical analysis, Nvidia stock is at 200 moving day average. Actually, it's just below it. And technically, analysts would say if it breaks below this level with volume and closes there for a few days in a row, then that indicates a bear market starting. Just give me 1 second. In the meantime, if any questions, please request to speak. All right. A few things I want to review today. We can go through Tesla's results. Nothing much to really talk about there. The gross margins are very bad, way worse than even I expected. Um, Troy put out a couple of charts that are really good. Yeah, one of my favorite accounts. Troy Tesla, at the top of our screens is the gross margin chart, 13.6%. And this is the lowest gross margin I've seen in a long time. It might be more than a decade, the worst gross margin for Tesla for more than a decade, which is incredible. Um, and of course, some of this is due to interest rates. But if the bull thesis is that it's going to take interest rates to come down to back to 1-2% for gross margins to improve, then you have a problem. Then there's a problem there. Let's see. We're going to also talk about Waymo's announcement. We're going to talk about some NVIDIA news, ServiceNow results. Not sure what to say about the unsupervised FSD, robotaxi, Optimus stuff because I don't think it's going to happen anytime soon. But there's a lot of promises made on the call, and then we're going to talk about UPS stock and Microsoft stock as well. Microsoft is obviously very important for NVIDIA, their biggest client. So yields are down a couple basis points today. GDP number came in lower than expected at 2.3%. After a big revision to GDP now, almost a percent revision yesterday to GDP now. It was expected to be more than 3% in Q4, and at the last second there was a big revision, which is in line with my take that economy is worsening at a faster speed than people think. But initial weekly claims today came in lower at 207,000, lower than the expected 221,000. So, according to that number, recession hasn't started just yet, but I think we're kind of on the verge of one. Continuing claims at 1.858 million. Pending home sales came in 5.5% drop in December. Housing market is deteriorating pretty fast. And oil price at 73, natural gas at 3.09. Natural gas prices have calmed down a little bit after the tough winter in the Northeast. All right, let's read this article from Reuters about earnings and see where we are. In S&P 500 flat as declines in Microsoft and Nvidia offset by other tech giants. S&P 500 was muted on Thursday as losses in tech heavyweights Microsoft and Nvidia encountered earnings-led gains for Meta and Tesla, while investors parsed a slew of corporate earnings a day after the U.S. central bank held interest rates steady. Microsoft dropped 6.2% after forecasting disappointing growth in its cloud computing business, while Meta Platforms added 1.8% after beating fourth quarter revenue estimates. So we're going to look into the exact forecast Microsoft made. It says forecasting disappointing growth in its cloud computing business. Let's see what the exact forecast is because that's important for NVIDIA. And commenting on Microsoft's results, Victoria Fernandez, chief market strategist at Crossmark Global Investments, said that people were waiting to hear something fantastic and they just didn't hear it. They were also waiting to hear if there was going to be any kind of decline in capex spending, and they didn't really get that either, Fernandez said. On Wednesday, the chief executives of both Meta and Microsoft defended their heavy investments in AI, just days after Chinese startup DeepSeek unveiled a breakthrough in cheap AI models that rattled Wall Street and triggered a bloodbath in AI-linked stocks. Meanwhile, Tesla gained 2.1% in choppy trading after saying it was on track to roll out new, cheaper EV models in the first half of 2025. It also said it would start testing a paid autonomous car service in June, overshadowing quarterly results that fell short of expectations. 10 of the 11 S&P 500 sectors traded higher, with outlier information technology down 1.2% after Nvidia's 3.8% drop exacerbated losses. Of the 149 S&P 500 companies that have reported earnings so far, 73.2% posted numbers that exceeded analyst estimates according to data compiled by LSEG. UPS lost 17.5% after forecasting 2025 revenue below expectations. That's a massive drop. 17.5% for UPS, I believe, generates. I mean, it's a global company, but generates a lot of its revenue from US, obviously. And not sure what percent. I think they're more domestic than FedEx, but that's a massive drop. So this is not just an Nvidia story here. This is also Microsoft now dropping heavily, UPS dropping heavily, and a bunch of others as well. Dragging the Dow Jones transport average down 1%. Lam Research rose 8% after the chip-making equipment supplier forecast third quarter revenue above expectations, while Comcast lost 12.5% after reporting a steep decline in broadband subscribers for the fourth quarter. So that's really interesting too. The focus will now be on Apple and Intel. So that's going to come out after hours here, and I'll stay on today. I have some time, so I'm going to be on for a few hours today, and so let's keep it going. Take a moment to like and repost the space, and like the YouTube video as well. I'm going to be on for a few hours today. We have a lot to review. The focus will now be on Apple and Intel, which are scheduled to report results after markets close. The Fed Reserve said kept interest rates unchanged on Wednesday, removing language acknowledging easing inflation from its latest policy meeting statement. Chair Powell said there would be no rush to cut rates again until inflation and job numbers made it appropriate. So we have high interest rates for the foreseeable future, and that obviously is not good for asset prices or car sales or home sales, etc. Expect weakness throughout the year, in my opinion. We'll see. Data showed earlier on Thursday that US economic growth slowed in the fourth quarter, while jobless claims report for this previous week saw claims falling lower than expected. The economic consensus the Russell 2000 small cap index was up 1.2%. Among other movers, IBM jumped 12.7 after the company surpassed Q4 profit expectations. ServiceNow lost 13.1% after the software firm forecast annual subscription revenue below Wall Street estimates. Advancing issues outnumbered declares by 4.4 to 1 ratio in NYSE and 2 to 1 ratio in NASDAQ. Okay, let's look at ServiceNow. I'm a little curious about ServiceNow. Unless there's any questions about Tesla, but it's pretty well covered. So um, I don't really have much to say on Tesla. I did increase my short position just a little bit. So let's see. ServiceNow. ServiceNow stock is down 13%. The 52-week high is 1,200. It's now below 1,000. So it's about 20% in line with all the other penny stocks. Okay. ServiceNow investor relations. Let's see. Quarterly results. Okay. ServiceNow reports This is, the reason I'm reviewing ServiceNow is to kind of get a gauge of how the AI hype is trending. And I think this might be kind of the early indications of a bubble popping. I think the bubble popped this week, but we need to see confirmation from other companies that are in the same space, not just Nvidia. ServiceNow reports fourth quarter and full year 2024 financial results. Board of directors authorizes another $3 billion for share repurchase program. That's amazing. They're buying back stock at these levels. Amazing. And I suspect, Nvidia is buying back some stock too at these low prices. So we'll see if it pays off for them. Bold strategy. Still trading just below $120 per share. Subscription revenues of 2.866 billion in Q4, representing 21% year-over-year growth, 21% in constant currency. Total revenues of $3 billion in Q4, representing 21% year-over-year growth and 21% constant currency. Okay. Nearly 500 customers with more than $5 million in ACV represent 20, so about 20% growth rate. ServiceNow, the AI platform for business transformation, today announced financial results for its fourth quarter ended December 31. Close out the year exceeding Q4 expectations on top of our beat and raise track record, said the CEO. AI is fueling a top to bottom reordering of the enterprise technology landscape. Leaders are embracing the ServiceNow platform as their AI agent control tower to unlock exponential productivity and seamlessly orchestrate end-to-end business transformation. We are still in the early days of a massive opportunity. ServiceNow's innovation, growth, and profitability puts us in a class of one. Okay. Current remaining performance obligations, contract revenue that will be recognized as revenue in the next 12 months was 10.27 billion, representing 19% year-over-year growth and 22% constant currency. Company has 2,100 customers with more than 1 million annual contract value, representing 12% year-over-year growth, and nearly 500 customers, more than 5 million ACV. Okay, the diversified customer base, I guess. Q4 was a great quarter, capping a year of incredible innovation execution. Our Gen AI net new ACV stepped up meaningfully in Q4 as the number of Now Assist Service Desk deals grew over 150% quarter-over-quarter. We're just scratching the surface of what's possible. The moves we're making in 2025 aren't just about maintaining our lead, they're about expanding it. Okay. Um, I'm going to go to the financials here. This is just a lot of fluff. Okay. Top line grew 21%. Fourth quarter the same. So stable growth rate. 79% gross profit margin for Q4. 82% for the year. Free cash flow 1.4 billion for the fourth quarter. GAAP bottom line for the quarter is 384 million. Income from operations 12% margin, operating income margin for ServiceNow on a GAAP basis, 30% non-GAAP basis. I'm guessing they exclude some share-based compensation here. $3.4 billion free cash flow for the full year. So it's actually very similar to Tesla in terms of free cash flow. Tesla's worth 1.3 billion. ServiceNow is worth 200 billion. Okay. Financial outlook. I think what really hit the stock is the growth rate in the outlook is up on less than 20%. So there's a slowdown in the growth rate they're looking at. Our guidance includes GAAP and non-GAAP, blah, blah, blah. Since September 30th, ServiceNow has seen incremental strengthening of the US dollar, resulting in a foreign exchange headwind of approximately 175 million for 2025 subscription revenues, which includes 40 million in Q1 and 205 million for Q1 2025 CRPO. Okay. In 2025, we will begin shifting more of our business model to include elements of consumption-based monetization across our AI and data solutions. For instance, we will include our new AI agents in our Pro Plus and Enterprise Plus SKUs, foregoing upfront incremental new subscriptions to instead drive accelerated adoption and monetize increasing usage over time. We're also optimizing certain aspects of our go-to-market approach and creating more integrated solutions. A lot of fluff. Full year GAAP guidance of growth 18.5 to 19%. Free cash flow non-GAAP guidance of 32% margin, free cash flow margin of 32%, and then the income from operation 30.5%. So let's compare that to 2024. Same free cash flow margin and about the same, slightly better income from operations margin. So they're not saying their profitability will worsen, but what they're saying is their growth will slow down just a couple percent. So that's really interesting that the stock sold off so much. I thought these forecasts would be much worse, but ServiceNow is down 13% today, and it's down 17% from 2 days ago. Very interesting. Software company in Santa Clara, California, that develops a cloud computing platform to help companies manage digital workflows for enterprise operations. Okay. 22,000 employees. Let's see some news. Maybe I'm missing something here. Company says it's moving more to pay as you go for AI tools. Potential disruption to US spending also weighs on guidance. ServiceNow gave a fiscal sales year sales outlook that fell short of expectations, saying it is focused on fueling adoption of new generative AI products rather than generating significant revenue for those tools in the near future. The shares dropped in pre-market trading. Subscription revenue 2025 will be about 12.7 billion. The company said that's shy of the roughly 12.9 billion anticipated by Wall Street analysts. That's a very narrow miss. I mean, it's kind of interesting that these stocks are plunging so much on a narrow miss. Um, okay, so I guess that's service now. I'm going to take a couple of notes here. Give me 1 second. Okay, let's look at UPS. Domestic segment, 17.3 billion dollars of revenue, 1.7 billion dollars of operating profit in Q4. Um, it's higher than last, so there's some growth, zero point 0.4, let's say about 3% of growth on top line year over year, and more than 10% growth in operating profit. So the domestic business looks pretty good. And like I suspected, domestic segment is international segment is only 5 billion. Domestic segment is 17 billion revenue. So it's mostly US story here. And the international operating profit grew as well, quite a bit. Full year 2024, revenue was $91 billion. Operating profit of $8.5 billion. Non-GAAP adjusted operating profit 8.9. Operating margin was 9.3%. Non-GAAP was 9.8%. Cash from operations was $10.1 billion. Non-GAAP adjusted free cash flow was $6.3 billion. 2025 outlook. Today, the company announced the following set of strategic actions. First, it has reached an agreement in principle with its largest customer to lower its volume by more than 50%. So that would be Amazon by the second half of 2026. Second, effective January 1, 2025, the company has insourced 100% of its UPS SurePost product. And third, in connection with these efforts, the company is reconfiguring its US network and launching multi-year efficiency reimagined initiatives to drive approximately $1.0 billion in savings through the end-to-end process redesign. Okay. For the full year 2025 on a consolidated basis, UPS expects revenue to be approximately $89 billion, operating margin to be approximately 10.8%. So 89 billion lower than $91 billion. So that's a 3% drop in revenue for UPS. That's amazing. That's amazing. Capital expenditures was 3.5 billion, dividend payment of around 5.5 billion planned, share repurchase about 1 billion. Effective tax rate expected to be around 23.5%. Okay. I mean, this is the reason why UPS stock is down so much. UPS is an important company for um, the economy, obviously. The stock in the last 9 months is down 27%, most of it coming today. The stock is back to 2014 levels. Amazing. It's only a 5% dividend yield. I wonder what ACDC has to say about UPS. And any questions, comments about Tesla, you're welcome to come up and say your piece, ask a question. Um, I think the margin table from Troy is very important to consider. The automotive sales have sold, and I think they're going to go down further in um, next year too. So in 2025. So ACDC, what do you think about Tesla's results, or UPS, or ServiceNow, or Microsoft, or Nvidia?
Wow, that's a whole lot of thinking. Um, I don't own UPS. I own a little bit of FedEx, and I think I was trying to listen into what you were reading there, but my personal take is that UPS has more internal problems than just macroeconomic problems. Um, FedEx is a non-union shop. UPS is a non-union shop. That union cost and the burden of that has been eating away at their margins for quite some time, among other reasons for the decline internally. So I think they have more of an internal problem than a macro problem with that. On Tesla's earnings, I mean, I'm just I don't even have words. I mean, I'm baffled. I've never followed a stock in my history of 25 years, which baffles me more than Tesla. I think the earnings were pretty dismal, to say the least. Last quarter, the third quarter earnings, the saving grace was the uptick in automotive gross margins. I think they went back, they clawed back the gross margins from 14 to 17 or so. And now we saw it give it right back to a new low, actually. So that's a big concern. And that's why aftermarket, the stock was trading down $20 and it would have probably traded down $50 today. But then, the conference call started and Elon made some bold predictions. And I think that's kind of like where we are with this, that people are believing that all of this will happen this year with no hiccups. But yet, people are only believing it to an extent that they're willing to hold on to the stock with all the risk built into it, but not buy the stock, right? Nobody's buying the stock. Otherwise, you would have seen a $50 movement upwards on those bold predictions, but we're not seeing that. So like I said, I think we have a bet on that. I'm still saying that they do a limited launch. I think more so by the year end. I don't think June. happens in Austin, but I think they'll do a limited launch, and it'll take a significant time for them to ramp up and for it to show to the bottom line. So how long does the market keep waiting and keep giving it a premium? I have no idea.
Okay. Now, I think the bet we have is for the paid service, right? So if they do a few cars for testing purposes this year, then I win. Is that right? Or is that somebody else's bet? Let me see.
I think my bet is that they will. I said that they will launch a limited robotaxi service in
All right.
one or two
Hold on.
cities.
Hold on. The exact wording matters here. So that's why we put these down. So we have a bet that, first of all, you said Elon steps away from Tesla CEO by the end of 2025, 2027, sorry.
Yeah, that's a bet too.
You still believe that?
I think there's a possibility.
Okay.
You know,
All right. The bet is FSD unsupervised in 2025. FSD unsupervised in 2025. Okay. Yeah, I don't see it. Sorry. You said the government spending will go down in 2025. I don't see that either. You still believe that?
I do. Yes.
You know, we made that bet in December 11, and Elon since has come out and said, you know, it's not going to happen. 2 trillion isn't going to happen. He's
He
already
said two
backtracked.
trillion is not going to happen, but
Hmm.
they're making cuts. They're making a lot of cuts. I mean, look at some of the biggest controversies that you're seeing now. You
But
know,
that
regarding
got pulled back though, right? That got pulled back.
some of it is getting pulled back, a lot of it is not getting pulled back,
Hmm.
and it's definitely going to take time. And yes, 2 trillion is like a huge number, but
Hmm.
I think they will make some cuts in government spending for sure. I mean, you're talking about a guy
Uh,
who runs Tesla at bare bones, okay, to a profitable company, right? So he'll get it done there.
yeah, we'll see. We'll see. Um, Tesla will unveil a new vehicle without a steering wheel on 8/8. You
That was a
bet.
machine.
Yeah, exactly. Did you get paid for that one?
No, he's been hiding.
Okay, I'll collect. Don't worry, I'll collect. Right, he
But that
does here.
was that was kind of like a technical one, right? Because I think instead of 8/8, it ended up being 10/10. So I don't know. I guess we can call that even.
Really? I don't know. I don't know. Um, Unveil a new vehicle without a steering wheel. I mean, I guess they did unveil Cybercat, right? Okay, let's see. Optimus in homes by end of 2027. Oh my gosh, I said yes to that. That's crazy. That's you're gonna win that one. What did you make of his comments around Optimus?
I think they were pretty bold. I mean, the numbers that he threw around yesterday were like, wow. I know he's pumped up and everything, but I mean, what did he say about the company being more profitable than?
Wait a second. Did you? We're gonna get back to that. Did you Q2 GDP growth more than 2%? You said no. This is 2024. What was Q2 GDP growth? Did you pay me for that?
Wait, you're gonna have to show me that bet. So this was we probably made in April of
May.
last year,
Yeah, May
May.
2nd,
Okay,
2024. Let me see. Gross domestic product.
I think you
Um,
got that.
did I? I think I did too. Did you pay me for that? The heck?
I'll pay
Uh,
you if you can confirm it.
I'm here to collect. Um, yeah, I'll here. I just liked it, so you should be on your notifications. I can pin it up here too. Q2 2024. Um, in the meantime, Stephen, how are you?
Hey, good morning, Iman. So the first question I had was just, did they address how they plan to break into the rest of the automotive market like the other 98%? Was that even like mentioned or discussed on the call? Because I didn't hear it. And I was wondering if you knew.
Sorry, did they mention what exactly?
Just like a path forward in how the automotive business plans to like penetrate the rest of the auto market, because currently they just account
No,
for like
they didn't talk
10%,
about
but
that. They didn't
they
talk
didn't
about
mention
US
it.
automotive market too much.
They did talk
Um,
about a version 14.
yeah, yeah, they did. Yeah, I actually made that prediction too a few months ago that we'd start hearing about version 14 by spring, and it's exactly what happened. ACDC Q2 2024 growth rate, it was 3%. So Venmo, please, when you get a
I
chance,
I will do
five
that.
dollars, $5. But I will collect from a machine for you. Don't worry.
You know what? How about this? I'll just subscribe. I think I'm still on your Patreon.
Yes. No, no.
Um,
Yeah, forget Patreon. They kicked me out. They kicked me out from Patreon. A couple of the
so
people that I posted their names of for long story short, they complained to Patreon. And Patreon is like, take down that tweet or we will kick you out. I said, whatever. Yeah, if you want.
okay, that must have been recent because I think I was still getting the debit. I hope they're still not debiting me and paying it to somebody else. But
No, no.
how about this? I'll reinitiate my subscription
No, just do it on X. You can
on
now
X.
subscribe for yeah, just do it on X and you can
Yeah,
now
that's what
subscribe
I'm
for
saying.
$5. Yeah, yeah, there you go.
I'll do that. Okay,
Yeah,
done.
even better. Yep. And we can have subscriber only spaces now, you know?
I love that. Some real deep dive and some really good names.
Exactly. Exactly.
Remember, I talked to you about Oracle a couple of days ago.
Yeah, you're right. You're right. All right. And I think Chris James is also a subscriber. So I actually have a few subscribers now. So that's great. We can start having some subscriber only spaces. Steven, go ahead.
Are you going to change any of your positions on Tesla, Iman? Or did you cover that already?
No, yeah. I added to my short. I mean, the conference call was a joke. The last two conference calls have been a joke. It's crazy, a mockery, but whatever.
Well, did you add more since the call? Because you added some during the call, I thought, or right before the call. But did you add more
No, no,
again?
no. I'm talking about that. I'm talking about that.
You know what I would have liked to hear yesterday from some of the analysts? I think who was that? Adam Jonas, who asked about lidar, which was a useless question. I mean, like, what is Elon going to say? Like, yes, that's our next step. But I would have loved to someone, hold them to the fire on the automotive gross margins. Somebody talk about the Cybertruck and what's the future plan for that. But I didn't see really any tough questions around anything.
It doesn't matter. I think these earnings calls are entertaining, but I don't think we learn much from them. Um, so I actually put out a bet yesterday that I think Tesla will lose money this year in 2025. What do you think about that?
So you're saying net negative cash flow?
Gap profits.
And what are you basing that on? Just an increase in R&D?
Well, that too, but also I think automotive is going to worsen this year quite a bit.
I agree it'll worsen, but I think don't they have healthy margins where they can still sustain it? Unless, of course, they have significant R&D costs or costs associated with launching Cybercab.
Yeah, I mean, there's going to be production ramp costs with Model Y, obviously. Giga Shanghai production ramp. I was a little surprised that they weren't able to increase free cash flow at all in Q4, despite liquidating so much inventory and energy now pumping for a couple quarters in a row at full capacity. So this is as good as it gets, basically, on free cash flow. for a while, which is amazing. It's only $4 billion a year. That's incredible. And majority of that is coming from Z credit sales. So the fundamentals of the business is really, really bad right now. Steven?
Does the balance sheet give any insight into how much crypto they still have invested or holding?
I think they have the same amount. It's very immaterial. It's an immaterial
Okay,
amount.
thanks.
Yeah. Yeah.
But didn't crypto add like about 16 cents to the earnings?
Yeah. Yeah, they did now they do the mark to market on those.
Which, if crypto goes down, then is the
Right.
mark to market on an annual basis, right? It's not quarterly, but it's probably annually.
I think it's quarterly. Yeah, why would it be annual?
I wasn't sure exactly what the accounting
Yeah.
laws were for that, but I mean that's a huge risk. I mean, crypto's
Mm-hmm.
at a high
Mm-hmm.
here. I mean, imagine if crypto goes down to 80, 60, 40, whatever it could go down to.
Yeah, it definitely adds variability to earnings for sure. I mean, isn't that crazy though? Like most of the earnings, most of the free cash flow is from Z credit sales. Just imagine the $7,500 credit going down, you know? Like if that goes away, then what happens?
Can you explain to me, Aman, the ZEV credit sales, or those include also the credits that they get from selling to the other companies, right?
Yeah, that's the one. Exactly. In California and other Z states, there's about a dozen of them, I think. And those are being challenged by the Trump administration, but I don't think that's going to go away this year. I think that's probably going to be in the course for a while. But I mean, I can't imagine that going away. If that goes away, then Tesla's um, because that's been the majority of their profits for a while. So they would have to dramatically slow down the company, like to like bare bones survival mode if their credits go away. But the $7,500 credit appears to be going away soon. So whether this year, next year, I don't know. But if it does, then your 16, 17% gross margin right there is gone. You have negative gross margin at that point. If $7,500 credit goes away, Tesla could have negative gross margin. That's massive. That's a real problem.
You're saying that if the credit goes away, they're going to have to reduce the price of the cars.
Yeah, they'll have to reduce the price of the cars, and that's not going to be enough. They're going to have to reduce production, and then you start kind of spreading your fixed costs over a smaller number of units. I mean, they're really trying hard. Like in Q4, they really tried hard to get it up to 1.8 million deliveries, and they failed to do that. And now they've had the same number of last 12-month deliveries for more than 2 years, and that's despite massive price cuts and 0% interest rate offers around the world. So what's going to happen in Q1? Like, I wonder what the Q1 deliveries are going to be like.
Right. And I think the prior guidance for 25 was 20 to 30% growth. And I didn't really see that being addressed by or really asked by any analyst. But I did read somewhere that it was kind of like walked back by a generic line that we'll see some growth this year or something. So is that, do you see that being taken away? Because all these analysts, everybody, I mean, at least on X, were claiming 20 to 30% and basing their targets based on that, but nobody's readjusting their targets now that it's gone.
Can you say that one more time, that last part?
So a lot of the analysts were basing the 20 to 30% growth in 25 in justifying the price targets. And
All right.
now that's gone, and I don't see anybody who's come out and readjusted their price targets based on that. So we are assuming that the 20-30%, I mean, we already knew it, there's not going to be a 20-30% growth rate, right? But
Right.
I think the market's adjusted it too, that we're not going to see that.
Yeah. I think the market was pricing in something like, I think Gene Munster said something like 10-15%. So not the entire 20-30%, but something like 15%. But yeah, I mean, Troy's like, it'd be a huge success if they can do the same as last year. Steven?
Hey, just to go back to the to the credits that you meant, I don't even know how you say it, the ZBE credits. Aren't they at a state level? And California was talking about removing Tesla from their act, the
No,
Clean Air
the
Act.
the California was saying if Trump gets rid of the federal $75 credit, then they're going to introduce their state credit and leave Tesla out of it, basically. But I think the ZEV credits, the thing is like the value of ZEV credits isn't that much anymore because GM just announced that they are gross margin or contribution margin positive on EVs. Okay, so let's say for example that ZEV credits stay, EV credits go away, and GM's able to ramp profitably now, or at least not a huge hit to their um, bottom line profits. In that situation, GM doesn't have to buy credits, and anybody else, like let's say Ford needs to buy credits, they can just buy from um, other companies. They don't have to buy from Tesla anymore. Like Tesla isn't the only contribution margin positive company anymore when it comes to EVs. Hyundai is also doing some. GM is now also doing. I don't think Rivian is going to get there, but there might be other companies in the future too. So I feel like the ZEV credit potential income has decreased a little bit, even if they stay and Trump administration wants to get rid of them. Like for example, I guess his appointment for transportation secretary on day one removed Biden's administration's targets for emissions for 2030 already. Like they're not wasting any time; they're getting rid of these things. So I think it's going to be a challenging 2025 for Tesla.
I thought I also read somewhere that in Europe, some of these companies have already started buying ZEV credits from Chinese manufacturers instead.
Right. Well, those are not ZEV credits, but yeah, similar idea. They've been buying emission credits from Chinese automakers and other players. So to the extent that there are several players in each market, scaling EVs, then the value of ZEV credits kind of goes down a little bit because you have to compete with other sellers. You know. All right.
I would love to hear the bull side of this argument. I would love for someone to say that yes, it was bullish enough that at $400, because technically it's come down from 480. So at $400, it should be good value, right? So I would love to hear someone say that they're buying it at $400 right now.
Yeah, I don't know. I mean, I know there are some people who are buying call options and shares and everything. It's not obviously it's not just one sided here. There's a lot of trading going on in the stock today, so somebody's buying, somebody's selling. I don't know. ACDC, can you hear me?
I can hear you.
Okay. Give me 1 second here. What do you think about Nvidia? Do you think it continues to go down from here?
I don't see any significant downward move. I just think it's going to trot along. You're going to see some up days, you're going to see some down days. I think Nvidia's really lost their mojo. I think the reality has hit, and it's no longer the growth driver for AI that people thought that it was. And the model has completely shifted where the companies that are going to be utilizing, these models and providing a product, those are the companies that are still excelling in it. So that's why I look at Meta. Meta's continuing to go upwards here.
I think Meta is overvalued here, to be honest with you. $1.7 trillion company. They still rely mostly on advertising revenue, and the global economy is slowing down. So um, it's up 7 times from the lows in the last 2 years. Do you own Meta?
I don't, and I agree that the valuation is a little stretched on it.
Yeah, exactly. So yeah, I don't know. Interesting.
Did you see IBM? Something that nobody's looking at. The big blue. It used to be back in the day, the tech stocks among the biggest of the tech stocks that nobody talks about it now, and they
Yeah.
came out and they crushed their earnings.
Yeah.
And look at the valuation of IBM. I mean, these are the companies I think that'll fare well in a market like this. I think AI will definitely still continue to drive, innovation, productivity, but the high flying companies who are trading at perfect valuations and multiples are going to struggle to keep producing on the upside.
Yeah. What did you think of um, the Fed meeting? You want to talk some macro?
Yeah, sure. I was actually listening to you and Meta kind of go at it for a little bit. I just couldn't be on the space at that time, but my takeaway is that there's no other way to read it, or no need to read it any other way than exactly what he told you. They're on a hold pattern here, and there is no need to do anything otherwise. So I think we're going to see kind of these rates remain where we are. I think we saw the initial jobless claims come out today. That kind of adds to their stronger employment picture, while inflation is still a little bit alarming to them. So I think we're going to see the hold pattern, from the Fed. And these interest rates, which haven't completely played out in the market, are going to still continue to play out. So the liquidity is going to continue to come out of the market. So on a macro basis, I think it will still have some downward pressure.
Okay. The unemployment market is still pretty flat, though. Initial recruitments are low, so not much of an issue there so far. But why did you choose FedEx over UPS for your portfolio?
It's just a better run business. Like I said, UPS has internally just not been run well. You could take it from your own personal level of experience also, and you can see when you get a package from the UPS versus a FedEx. I see a stark difference every single time, and UPS is the company that unionized, and this is going back in, God, like decades ago. Okay, and their costs have gone a lot higher since then, and it's tough for them to compete. I think if without Amazon, really, they would really, really struggle to compete with FedEx on a one-on-one basis. I mean, look at the valuation of UPS here. That almost a 6% dividend, and they still can't perform. It's very tough in this environment to have a union structure and to be able to be. You can be profitable, of course, but to be able to have good margins. I'm actually for the first time looking to unwrap my Costco position just because of that. I don't know if you heard, but Costco, I think it's as of today, is they're about to go into a strike for a union strike for the first time ever.
First time ever. Okay. Yeah, I hadn't heard about that. I heard that they were going in. They decided last week, but I didn't realize it was the first time ever. Then, wow, that's amazing. FedEx is down only 1.8% today. In the last year, FedEx is up 10%. UPS in the last year is down 20%. Wow, that's amazing. That's a hell of a difference. In the last 5 years, UPS is up 11%. The last 5 years, FedEx is up 90%. Yeah.
Yeah, FedEx has been a company that I've been comfortable in holding for the long term, and it has had some violent moves. But UPS, I have bought, and I may look at it right now, depending on its valuation. But it's strictly just a trading stock, but it's really broken internally for them to turn it around.
What percent of FedEx's business is international?
I couldn't tell you that off the top of my head. Sorry.
That's okay. What percent of FedEx revenues are international? Let's ask ChatGPT. 28%. Huh. I didn't realize FedEx was also. I thought FedEx was more international than UPS, but they're about the same. Yeah, 20% for UPS, 28% for FedEx. DHL is a dominant international player in logistics. Majority international outside Germany. Interesting. Microsoft down 6%. Microsoft hasn't done anything in the last year. I mean, no wonder. Up 1%. It's flat basically in the last year, despite buying back so much stock. Their stock price is flat. That's amazing. Apple's going to announce today. Do you have any expectations for Apple?
Sorry. I don't hold. I mean, I hold Apple, but I'm not. It's kind of like one of those stocks that it's just a dead stock because nobody wants to sell it because of the low cost basis. So I'm not really up on their earnings. I'm just trying to get people to sell some, free up some cash, use it some in some other names. But I can't see anything that's been in the recent time that'll really affect earnings either which way. I mean, it's
Yeah.
just a consistent grower, right? I mean, they've got such a good service, recurring service revenue that it just keeps them going no matter what.
Yeah. Let's see Tesla Q4 earnings call transcript. I want to see these statements around Optimus that he made yesterday. Let's look at it a little bit more. The training for Optimus are probably at least ultimately 10x of what is needed for the car, at least to get the full range of useful role. Okay. Um, $10 trillion of revenue. A lot of uncertainty with Optimus exact timing because it's not like trains arriving station for the Optimus. The internal plan calls for roughly 10,000 Optimus robots to be built this year. What do you think? I mean, I'd be happy to take coffee bet on that if somebody wants to bet on coffee for it. 10,000 Optimus robots to be built this year.
You're saying that they're not going to build 10,000 this year?
Yeah, I don't think they will. Do you think they will?
I think internally they could. You know, it's not a mass production or anything. I mean, they could say they built 10,000 Optimus and they're using them in their factories and employed some in, I don't know, a couple service centers, get the whole public introduction going and everything. I think it's possible.
Mm-hmm. Lucia, what do you think?
I think that if Optimus needs 10x the amount of compute, and Optimus should go, according to Elon, in volume production 2026, 2027, with what money they're going to 10x the computing? I don't think it's feasible, and I think the quarterly report was a joke, and the valuation of the company is a joke.
Okay. ACDC, I'm going to make a coffee bet with you for 10,000. I'll give you 5,000. How about that? Just to make this a little bit more fair. You okay with that? More than five? You take more than 5,000 this year?
Sure.
Okay.
You're making me go bullish on Elon here.
Tesla produces 5,000. Tesla Optimus production. More than 5,000 in 2025. Yes. EGS the one. What gives you so much confidence? Where do you think they're going to build them?
Where are they going to build them?
Mm-hmm.
I think 5,000 is, I mean, so you think that they're going to need like a production line to build these?
Mm-hmm. Yeah. Yeah, I think they need something. I don't think they can build 5,000.
I see your point too. I mean, 5,000 is a decent number. We're not talking about hundreds or 500
Right.
that could be hand built. Boy, if they need to put a production line, now I see where you're getting to with your negative cash flow here. I'm starting to see it now.
Mm-hmm. Where do you think they're going to build them in Texas or Fremont?
I think they continue that in Texas. I think most of their stuff, everything that they're focusing on Texas itself, and especially if they're going to, you know, as they plan to go forward on a larger scale, I'm sure they're going to focus on Texas.
Mm-hmm.
Did you know this also? I'm surprised nobody has talked about it. I think it's actually a strength that they're looking to build a lithium refining site in Corpus Christi.
Mm-hmm. I mean, I don't think batteries are the limiting factor for production, so I don't think it matters that much.
Not really in terms of production. I'm just thinking in terms of lowering their costs on the batteries and possibly come up with some newer innovation in batteries, because I think that's what is really, in my opinion, that's what's needed. I mean, if you gave me the same exact Model Y with none of these new additions, but just gave me a battery that had 50 to 75 more miles and a faster charging curve, I would have seriously considered that over anything else.
Yeah. I don't know. I mean, BYD is able to, build cars for half the price nowadays. So I think that, whether you drop the price by 1,000, 2,000 because you're producing your own batteries, I don't think it's gonna matter that much in the longer term. Luce?
So yeah, man, when Elon said that the incident rate on FST is 1 every 5 million miles, something like
Mhm.
that. What did he mean? What did he mean? Can you?
Well, that's autopilot with human intervention, right? So that's not really FSD, I don't think.
Okay.
Internal plan calls for roughly 10,000 Optimus robots to be built this year. We will succeed in building 10,000 exactly by the end of December this year. Probably not, but we will succeed in making several thousand. Yes, I think we will, etc. Okay. Our goal is to ramp Optimus production faster than maybe anything has ever been ramped, meaning like aspirationally order of magnitude ramp per year. Okay. I mean, I don't think the design is ready even to start producing thousands. So, like if you remember back in Model 3 ramp, the design was it was pencils down second quarter of 2017, and they built 1,000 of them in 2017. So I don't know.
When do you think the new Y ramp up occurs?
It's supposed to be this quarter and next, right?
Yeah. When I go up to the inventory, there's still a lot of old Ys still available, and they've lowered the price on them a little bit. But it seems like they're going to want to clear that up entirely, and I don't think they're getting that demand.
Right.
Was there a Cybertruck number specifically? I know they don't release it separately.
I think
I thought
Troy's really good at that stuff. It's not very many. Let's see. Anything else on Optimus? Those Optimus in use at the factories for production design 1 will inform how we'll manage for production design 2, which we expect to launch next year. That's not going to happen. All right. We tried desperately with Optimus to use existing motors and actuators since nothing worked. Optimus will also be able to play the piano. My prediction long term is that Optimus will be overwhelming the value of the company. Okay. Somebody at Travis Axelrod, or one of the questions I guess was Optimus now most design locked for 2025, and he said it's not design locked. Okay. When will they start selling Optimus? He said we expect to close the loop with Optimus being used internally at Tesla because we obviously can easily use several thousand humanoid robots at Tesla for I think the most boring, annoying tasks in the factory. Didn't they like shut down the factory in Q4, especially the Cybertruck production line because the demand was a little lower than expected? So where is he getting this idea that they can be using several thousand of them? Am I wrong?
they did, and I think he said for tasks that nobody wants to do in the factory. So those tasks don't seem like the most sophisticated tasks. So that's why I think to me, this is all about show the market, give them something, just keep it going, give them hope. And that's why I think there will be a robotaxi launch. That's why I think they will get these Optimuses rolling. They just need to keep it going. My argument is, when is this stuff scalable? When does it start showing to the earnings?
All right. Let's see what else. The current line we're designing is for roughly 1,000 units a month. The next line would be for 10,000 units a month. The line after that would be 100,000 units a month. And I think probably with version 2, it's a very rough guess because there's so much uncertainty here. A very rough guess that we start delivering Optimus robots to companies that are outside Tesla in maybe the second half of next year or something like that. Do you want that bet? ACDC that they deliver to other companies
This year?
second half of next year?
No, I don't want that, but
Okay.
I'm not a sucker. Yeah, Mahan, I'm not going.
So then why do you think they're gonna? I mean, so you think that they're gonna use 5,000 humanoid robots at their factories? Where? You think they're gonna lay people off because they don't
I
need more
think
people?
I think they'll release the news that they produced 5,000 Optimus this year. Where they're using it, I don't know. Nobody will ever know. And I definitely don't think they'll be ready for working in an external environment with other companies. Not as early as 26. I think that the application is there. I just think it needs a lot more training for it to be viable for other industrial use.
Right. Right. No hands mode, Lucia. Go ahead. No hands mode today.
Well, there was also zero acknowledgement about competition about Optimus competition, and this is something that makes no sense because we are looking at Uni 3 from China, which looks extremely promising. We are looking at Figure here in the USA, and yeah, very misleading in my opinion.
Okay. Waymo announced auto mode activated. We're beginning our first fully autonomous miles for Waymo employees in Atlanta, building on years of experience and 33 million plus miles across San Francisco, Phoenix, LA, and Austin. Public autonomous rides will come to Atlantans exclusively through Uber later this year. There you go. Interesting. Yeah, I mean, they're not waiting anymore. They're kind of ramping up. Let's see where else they're looking to expand here. Las Vegas and San Diego. Experience is the best teacher, no matter if you're learning to drive a car or getting to know a new city. Waymo Driver, our core set of technology comprised of hardware and software that enables autonomous driving, has multiple lifetimes of experience navigating the real world and helping people and things get where they are going safely. To bring the benefits of our technology to more people in more places and deliver on our mission to improve road safety, we take Waymo Driver on road trips to regions where the driving culture and conditions differ from the areas we regularly operate. Each time we test the Waymo Driver in regions far from where we typically operate, we prioritize safety and are mindful of our footprint. Here's what we do on these road trips. Travel. First, we bring a small fleet of vehicles equipped with the Waymo Driver to a new city, and sometimes we return to cities we visited before. Testing fleets are limited and closed to the public. Initially, human specialists drive these vehicles manually to help provide a Waymo Driver context of where it's operating. Drive. Once the Waymo Driver understands the lay of the land, the vehicles can begin driving autonomously. During these trips, human specialists provide feedback to our engineering teams, and the driving experience and flag unique nuances that might come with operating in new areas. Simultaneously, our engineering team can evaluate the Waymo driver's performance in a virtual replica of the new location to measure how it generalizes. Interesting. Our teams use new learnings and insights gathered during this time to continue to refine the Waymo driver's capabilities and service experience. Driving in dozens of different cities over the years has helped inform the design and capabilities of our sensing technology, improve Waymo driver's performance in the cities where we operate, and safely bring our technology to new places. With this applied learning knowledge, we will progress even faster with each new place we bring the Waymo driver, and eventually have fewer novel situations that we'll have to teach the driver to navigate. For example, our rain testing in Miami was instrumental in enabling us to serve riders fully autonomously in wet and rainy conditions in California and Phoenix. As we scale up our fully autonomous ride-hailing service in SF, Metro Phoenix, Los Angeles, Austin, and beyond, we're excited to perform this testing in parallel.
Yeah, man. I'm sorry, I was juggling between a couple of things. Can you just read that line again? That it was this data helped them get approval from X market, got helped them get approval from Y
No,
market,
no.
something like that?
No,
Or
I think they're just talking about engineering of it. So, for example, the rain testing in Miami, they used it to improve serve riders fully autonomously in wet and rainy conditions in California, Phoenix. I guess you're right. Maybe that's for approval. Rain testing in Miami was instrumental in enabling us to serve riders fully autonomously in wet and rainy conditions in California and Phoenix. Yeah, that makes sense. You're right. That's for regulatory stuff. So their expansion should be faster and faster in every city going forward.
exactly. So that's what I was saying. In a way, it's bullish for Tesla because it's like Waymo's kind of laid out a regulatory roadmap, but they have to have their own data, and they don't have any data yet. So they're going to start that data June this year, let's just say, and then they're going to need it for another market, and then we're talking about markets with the rain or the snow and so on forth. So if everything works out, if FSD is completely there, even then I see a significant time for the ramp up, and that's exactly my concern on the valuation. And the road has to be perfect with no hiccups, no nothing, no approvals getting stalled anywhere, and that's what the stock's already priced in, I think.
Right. Yeah, maybe. Who knows? But Waymo obviously has the capability to do autonomous driving. Tesla doesn't have that just yet, right? So it's a bit different. Like my short thesis, bear thesis, is not that Tesla will have regulatory approval issues. It's that the technology will take time to get there. Well, for Waymo, the technology is already there.
So, Yaman, can I say something positive about Tesla for
Mhm.
this scenario? So, if we look at the FSD tracker, okay, we see 473 miles for critical intervention in cities 236. If we assume that they can triple that amount, let's say, in the second half of the year, and if we assume that 1 every 10 of those critical intervention would result in an accident, and we will assume that being remotely assisted would increase that critical amount even further, maybe I can see them getting to 10,000, which I don't know if it's enough, but there is a chance they could.
Okay. What did you guys think of the Tesla commits to free hardware for upgrades for FSD owners?
Huge controversy. I think Elon kind of stepped into it. I think Ashok was trying to linger the hardware 3 owners along. And then Elon pretty much just bit the bullet and said, no, we're probably just going to have to replace them. And only for those who purchased the FSD. But I have hardware 4. But I think they need to specify this, in my opinion, a little bit better, because there's already talks of people wanting to go buy hardware 3 vehicles, thinking that this is a done deal, and or people who are subscribing are looking to buy FSD now because they'll get an upgrade to hardware 4. So it's created a lot of confusion, and I just wish they addressed it better for those users. I mean, I honestly think that they owe it to the users. These are the users who actually contributed a lot to the development of FSD, especially if statements were made that your cars will be full self-driving, then you have to, but just give a little bit more of a clear explanation around it.
Yeah, I mean, I think there's only like 100 and 200,000 people who still have hardware 3 cars. I don't know.
Wait, 100,000 or so hardware 3? Are you talking about hardware 3 with FSD? Who purchased it?
Yeah, 100 to 200,000, I think. I mean, there's a few 100,000 people who purchased FSD with hardware 3, but some of those people upgrade hardware 4 cars already. You know what I mean? And they transfer their FSD for free already. So obviously they wouldn't be getting a hardware 4 upgrade. So outside of the ones, and a portion of them need to request it and everything. So I'm gonna guess like maybe 100,000, 200,000 people that Tesla would have to upgrade. And so it's not it's not a huge deal, I guess, from that perspective, but it's $300 million.
I'm also of the mindset that I think they're going to need to do some adjustments to hardware 4 also along the way. And maybe hardware 4 works in certain markets, but as we're already seeing, the cameras struggle with snow, with salt, to get to the expansion in those markets or nationwide, they're going to need to do some other upgrade, because the way it currently is structured, it really can't handle all places right now.
Right.
Another thing that is interesting is that both the Cybertruck and the new Model Y, sorry, have a front bumper camera, which is 180-degree vision, as 180-degree vision, which means that basically in intersections, they can see left and right, and basically there is not this problem with the big pillars camera being too far on the back. But if we consider that the new Model 3 doesn't have it, I would even question if all the cars, even the new ones, have the hardware to run FSD.
Yeah. Yeah, I mean, I think the new Cyber Cab with steering wheel will probably come with hardware 5, and they're probably going to have the Cyber Cab without the steering wheel testing in Austin. A few cars, maybe a few human, supervisors offline, whatever. So, but like ACDC, that I think it's going to take a long time before it's impactful for the bottom line. It's basically they're tracking Waymo so far, a couple of years behind, unfortunately. And then on the other hand, Waymo is ramping up. to 10 cities. And I think it's really like, once they're in 20 cities, which they're probably going to get to next year, you've covered most of the ride sharing demand. So,
And we can say whatever. Like I personally think that Tesla's FSD is better than Waymo, but Waymo has established themselves in markets already, and they're expanding very quickly in other markets. They're introducing newer vehicles at a lower cost. They'll probably downsize all the hardware they need to more concise needs of theirs. So that this is what marketing is, right? You people will have a different perception or a longer, better perception of Waymo by the time the cybercabs start rolling in. And we're thinking that the cybercabs will go completely perfect, right? That vision will be there and everything will be great. But any minor hiccups can change that market perception also along the way. So I think Waymo's like extending their lead already, and not backing off in any which way.
yeah. And I think people are assuming that Tesla will have a materially lower production cost, but I don't know if that's necessarily true, honestly. Um, Waymo is already improving scores version after version. So, and their partners have a similar. I mean, I guess they have to pay a profit margin to their partners, I guess, but you know, all right. Well, I mean, if there's anything else, we can. Go ahead.
Yeah, Yaman. There is something very interesting coming out, which is Intel earnings. One of the most undervalued companies that there is out there. If you are interested and you want to, I don't know, talk about it, I'm absolutely free to do that. But if you're not interested, don't worry.
Yeah, why do you say they're undervalued?
Yeah, man. The technology they are putting in place, it's gonna leap TSM, and the chance that Intel is gonna lead in edge AI, it's very high. There is a very good possibility that it's gonna be a customer cycle regarding AI PC. And their foundries will return positive, margin positive in 2026. And even 2025 should see the company going cash flow positive. I think it's extremely undervalued, and it's such an important company geopolitically. And yeah, it has everything in place to do great, and is valued at even less than book value right now.
Okay. And they're announcing when?
At market close.
Oh, today. Okay, along with Apple. AC, do you see any views on Intel?
I don't. I keep getting little pieces, bits and pieces from my Intel, which is Luce. So it's interesting. It's just a big show me story right now, and the market doesn't seem to think so. So I'm neutral on it.
Well,
Okay.
actually, Intel is up almost 3.5% from the bottom of today, which doesn't mean anything, but earnings are coming up. And if the roadmap is good and it's in place, maybe a new CEO, a little bit of better perception of the company, it could rise 10, 20% easily. But we will see.
So you're in it for a trade, Luce?
No, I'm long, like 2-3 years long. I think this company will triple in 2-3 years, will triple, and I think in 10 years it could 10x without
Yeah.
any problem.
Yeah. Okay. Well, good luck to you. Good luck to you with that. Let's see. Anything else? Let's see. Fed wait and see approach. UPS scales back on Amazon deliveries. It just doesn't make sense for us. It says Amazon sues to block the release of records to Washington Post. Interesting. Meta, Microsoft downplay DeepSeek threats. Let's look into this article. DeepSeek sent Wall Street into a frenzy on Monday, sending shares of Nvidia cratering more than 17% and raising questions about whether big tech firms like Microsoft and Meta are overspending on their own AI infrastructure buildouts. Cut to Microsoft and Meta's earnings calls Wednesday night, and things were hunky-dory. The CEOs of both companies, while acknowledging the efficiency improvements DeepSeek introduced to its AI models, said the Chinese-made AI will ultimately benefit their companies as well. That type of optimization means AI will be much more ubiquitous, Microsoft CEO Satya Nadella said. And so, therefore, for a hyperscaler like us, a PC platform provider like us, this is all good news as far as I'm concerned. Meta CEO Mark Zuckerberg, meanwhile, seemed to downplay the threat posed by DeepSeek, saying that the industry is constantly changing and DeepSeek's announcement is simply a part of that ebb and flow. I think there's a number of novel things that they did that I think we're still digesting. And there are a number of things that they have that we will have to hope to implement in our systems, Zuckerberg said. I kind of expect that every new company that has an advance, that has a launch, is going to have some new advances that the rest of the field learns from. And that's sort of how the technology industry goes, he added. DeepSeek set off alarm bells earlier this week as Wall Street caught wind of the company's claim that it trained its open source DeepSeek V3 AI model, which matches or beats the performance of US models for just $5 million using less than state of the art chips. US companies have spent tens of millions of dollars training their own AI models, leading to investors to question whether US tech companies are being outpaced by Chinese rivals. Why are they spending so much building massive, high priced data centers? However, analysts have questioned DeepSeek's claims, noting that the company it didn't incorporate the costs associated with prior research and ablation the experiments on architectures, algorithms, and data into the $5 million figure. Others have criticized the fact that DeepSeek developed its model using a technique called distillation, which teaches an AI model using questions and answers provided by a larger model. During Meta's investor call, Zuckerberg said it's too early to tell if there's any need to pull back on investing in AI infrastructure based on DeepSeek's data. Instead, the CEO said, Meta is better served by investing more in its data centers because the industry is moving to AI models that provide more accurate answers to questions depending on how much computing power they can pull from. Okay. Anything else, guys? Any other questions, comments? Tesla, Nvidia,
Yeah, I had a
ServiceNow?
question.
Yeah,
I had a
Lucia, go
question.
ahead.
Do you think that data is going to be the issue when scaling up, or do you think synthetic data will be enough?
I think Meta's view on this is that the need for human feedback will decline, but it won't go away for some time. But I think, and I agree. I mean, it kind of makes sense that as simulations improve, then increasingly you will need less human feedback.
I think there's some data that is still going to be very valuable. I heard you and Meta talk about Reddit yesterday, and I think Reddit has invaluable data. In fact, that's exactly what's taken the stock price. I thought you said something like if Reddit would go IPO, because they went IPO a couple of years ago.
Oh, really?
Yeah, Yeah, this was, I think, actually last year. I'm sorry, last year. From what I remember, it was somewhere
Oh
around the
yeah, you're right.
$50 or
Mhm.
so. And then the big move in the Reddit came all around Q4 last year, and it was basically because of the data, because
Mhm.
people realized how much valuable data Reddit has on there.
Mhm. Mhm. Yeah, $35 billion company. You're right. I was mistaken. The jump happened in October 29. So now it's a $200 per share company, $35 billion market cap. All right, great. Roy just issued his 2025 deliveries estimate, 1.77 million units. Analyst consensus is 2.04 million. He
I'll
expects
tell
a
you,
1%. Yeah, he expects a 1% decline this year, on top of 1% in 2024.
Troy's analysis has been great. He's been he's been spot on so many things, and I
Hmm.
see him getting all this hate for it, and it's unfortunate, that people are not willing to listen to somebody who's actually crunching the numbers.
Right.
This guy was the same guy who used to be praised when delivery numbers was the story. And now, just because people have moved away from that, and they don't want him pointing out at delivery or the actual numbers, he gets so much hate. I feel so bad for that, but he does great work.
Yeah. Yeah, it really is sad. You're right. Um, Somebody asked, don't you think the new variant or model is going to increase the overall volume? And Troy says that's already included in my calculation. He says, I think the new vehicle will be a shorter version of the Model Y. Since it's similar to the existing Model Y, I assume 50% cannibalization rate. That means for every 50,000 units, um, the new car sold, I would reduce existing Model Y sales by 25,000 units. And then he says in 2020, Giga Shanghai produced 50,000 Model 3s in the first 6 months of production. A year later in 2021, they produced again 50,000 Model Ys in the first 6 months. So that's probably a good estimate, he says.
Yeah, man. Do you think they're going to roll out a compact?
Man, look at this. His original estimate. Yeah, I think they will. I mean, I guess this is what they will do, right? I don't know. So Troy says for 2024, he had 2.06 million estimated at the beginning of the year, January 15th. And we ended up with 1.78, I think. That's crazy. And the analysts had 2.2 million, and their estimate was 1.97 million going into the. That's so crazy. Oh, that's after Q1. So significant drops after Q1 to estimates last year.
I have personally never seen analysts believe in so much hype. That also from a mature company. I mean, these hypes go along well for startups, new companies. We know that they're not going to be profitable for years, and but the story has to be there. But I've never seen more analysts, put out. I mean, the CFRA is the research that I follow. They actually took down their earnings estimates for this year and for next year, and yet they they took their price target up higher. I mean, I've never
Mm-hmm.
seen this happen before.
Mm-hmm. Yeah, we've seen a few of those actually. Yeah, you're right. Blackstone in talks to buy stake in New York office building. Okay, Snowflake CEO says DeepSeek is legit. More OpenAI rivals coming. Apple's flagging AI hopes gets revived from DeepSeek's emergence. Okay. All right. Well, I don't see anything else here. So let's see what Apple announces, and then we can talk about that tomorrow. All right. That sound good. Thank you very much, everybody. And I'll chat with you all next time. Take care.